IGO is a nickel company that spent hundreds of millions of dollars building a processing operation in Western Australia. That operation included a 650,000 tonne per year concentrator, a tailings facility, grid power, camp, airstrip, the lot. And then we all know what happened next. The nickel price collapsed. But as the old saying goes, blood in the water creates opportunity. And the company we'll be talking about today effectively picked up the entire operation from no upfront cash. But you know what? That's not even the most interesting part of this story, because a few months later, after acquiring the operation, the new owners decided to drill beneath the main gold resource. And guess what they found? 13.5 metres at 3.3 grams per tonne gold and 5.1% copper. And that was outside the resource. Now, from a geological perspective, that result raises a very interesting question. What else is sitting underneath that deposit? I'm Amo. I'm an Australian geologist, and for the past decade, I've worked in Australian mining. Everything that I talk about in this video is my own geological and technical interpretation, and so you should not be using it as financial advice. Today, we're going to be covering Medallion Metals. The ASX ticker is MM8. Current market cap is $409 million as of the 13th of August 2026. And with Medallion, there are three things that potential investors really need to understand. Firstly, is the infrastructure that they've acquired. Secondly, it's the economics of the mine that they're already building. And thirdly, the possibility that the system underneath could be substantially bigger than what they've already defined. So, with all that in mind, let's get into it. Medallion's Ravensthorpe Gold Project sits in the southern Western Australia around the historic Cundip Mining Centre. Geologically, we're in the classic Archean greenstone belt. Now, that's important because these rocks host some of Western Australia's major gold systems. At Cundip, Medallion currently has a sulphide resource of 5.7 million tonnes at 4.6 grams per tonne gold and 0.6% copper. That's around 840,000 ounces of gold and 37,000 tonnes of copper. So we're not really talking about an enormous resource, but we are talking about some pretty serious grade. And importantly, this thing hasn't been drilled particularly deep. The average drilling depth is only around 100 metres, with the deepest drilling reaching a little over 400. So just keep that in mind, because we're going to come back to the underground shortly. So let's talk about the $500 million infrastructure play, Cosmic Boy. IGO had been operating nickel mines at Forrestania, and when nickel prices collapsed, they wound the operation down. But you can't simply shut the gate and just walk away from a mine like this. There are rehabilitation liabilities and ongoing obligations. Medallion essentially offered IGO an exit, and Medallion took ownership of the Cosmic Boy processing plant, the infrastructure inventories, and the rehabilitation obligations. Now, IGO retained certain nickel and lithium rights, and they get up to 1.5% royalty on future gold production. But Medallion paid no upfront cash considerations for the operation. And that's significant because Cosmic Boy isn't just some old shed with a crusher in it. It's a 650,000 tonne per year concentrator with a tailings facility, grid power, camp, airstrip, and established mining infrastructure. Now, instead of building a processing operation from scratch, Medallion is refurbishing an existing one. And you can see the impact directly in the feasibility study. So let's look at the numbers. The pre-production capital is $138 million. Now, for that, Medallion is targeting around 77,000 ounces of gold equivalent per year in stage one. The current mine life is 5.7 years, and the all-in sustaining cost is $2,279 per ounce, net of copper credits. And the feasibility study wasn't built using today's gold price. It actually used $5,200 per ounce of gold. At that price, the project generated a post-tax NPV of $443 million and an IRR of 87%. And approximately 1 year payback. At the highest spot price scenario used in the study, NPV increased to around $668 million and the IRR to 125%. Those are extremely strong numbers on paper. And they've also secured a US $50 million facility from Trafigura alongside the offtake agreement for the copper gold concentrate. The regulatory approvals are now in place. First order Cosmic Boy is targeted for Q2 of 2027. So this isn't an early stage explorer talking about potentially building a mine one day. They're moving into development, but there's one obvious weakness in the story. 5.7 years isn't a long mine life, and that's where the geology starts getting interesting here. Hillsborough Deeps. Now, in June, Medallion reported a hole beneath and adjacent to the existing gem resource. That was DD26KP1243, and it hit 13.5 metres at 3.3 grams per tonne gold and 5.1% copper. And then another zone, 11.7 metres at 3.5 grams gold and 2.2% copper, including 4.7 metres at 7.2 grams gold and 3.9% copper. This mineralisation sits outside the current resource. Medallion calls it Hillsborough Deeps, and this wasn't completely isolated. A hole drilled in 2024 hit the same interpreted structure around 20 metres away, and that was 7.7 metres at 5.9 grams gold and 3.4% copper. Now, forget the gold for a second. Look at the copper. We're seeing 3%, 4%, 5% copper at depth. That's not incidental copper sitting inside a gold deposit. That's serious copper mineralisation, and that's what caught my attention. The main Cundip resource averages just 0.6% copper. Down here, we're suddenly seeing several percent. In hydrothermal gold-copper systems, changes in metal ratios with depth can tell us something about how we're moving through the mineralized system. And one possible interpretation is that we're actually getting closer to a hotter, more copper-rich part of that system. Now, I want to be careful here. 2 drill holes do not make a discovery of scale. We don't know the dimensions, and we don't properly know the true width yet. And we certainly don't know whether this becomes an economic resource. But there's another piece of evidence here. Medallion actually ran downhole electromagnetic surveying around their drilling because these sulfides actually contain conductive minerals like pyrrhotite and chalcopyrite. Downhole EM can potentially identify sulfide bodies sitting away from the drill hole, and they found several strong off-hole conductors associated with Hillsborough Deeps. Some of these targets sit more than 100 metres away from existing drilling. That's what I want to see tested, because if the next hole hits similar copper-gold mineralisation in those conductors, Hillsborough starts becoming much more interesting to me. And it's not the only evidence the system continues at depth. In July this year, drilling deeper into GEM returned 4.92 metres at 15.5 grams per tonne gold and 0.9% copper, including a very narrow 30 centimetre at an enormous 204 grams gold and 7% copper. Now, don't get carried away with 204 grams, it's only 30 centimetres, but taking together, those results tell us something important. The mineralised system has not simply stopped at the bottom of the existing resource. Now, there's a second source of growth. There's Forestania itself. Now remember, Medallion didn't just acquire the processing plant, it acquired a much larger gold footprint around it. The standout target is Lounge Lizard, and it's only 14 kilometres from Cosmic Boy by private haul road. Historical drilling includes 23 metres at 5.85 grams per tonne gold from 13 metres deep, and 21 metres at 4.02 gold from 30 metres. Now, Medallion is working towards a maiden resource there, and this is where the Cosmic Boy acquisition becomes strategically interesting. If Medallion can identify additional economic gold deposits around Forestania, it already owns the processing infrastructure. So Cosmic Boy potentially stops being simply the plant for Ravensthorpe. It becomes a regional processing hub, and that's the longer term opportunity here. Now, there's no opportunity without risk. So there are 2 big things I'd be watching for. And the first is obviously the mine life. The feasibility study currently gives us 5.7 years, and that's the biggest weakness in the development case. Only around 44% of the existing sulfide resource is included in the initial production inventory. So there's already material outside the mine plan, but investors still need to see those ounces converted into actual mine life. Hillsborough and the broader exploration portfolio potentially solve that problem. They haven't solved it yet. And second is just going to be execution. Medallion is becoming a mining company. That's very different from being an exploration company. They really need to establish the underground operation, refurbish Cosmic Boy, and truck ore approximately 173 kilometres between Ravensthorpe and Forestania. Projects can slip and capital costs move. Underground mines do encounter real-world problems. Now, the feasibility study looks excellent, but now they have to actually deliver it. So, what's my verdict? Here's how I see Medallion. The existing development project already has a lot going for it. High-grade gold copper mineralisation, relatively modest development capital, existing processing infrastructure, strong feasibility economics, financing and offtake support from Trafigura, approvals in place, and first production targeted for next year. The obvious weakness is the 5.7-year mine life, but that's also why the current drilling matters so much. If Hillsborough Deep starts producing repeat intersections of multi% copper and good gold grades over meaningful widths, the geological story changes considerably. And if Lounge Lizard adds another meaningful resource close to Cosmic Boy, the infrastructure acquisition starts looking even better. So I'm not particularly interested in the 204 grams per tonne gold headline. I'm interested in something much simpler. Do the next holes hit the conductors? because if they do, and those copper grades and gold grades continue along strike and down dip, Hillsborough could become a very important part of Medallion's story. So that's what I'll be watching. Now, if you're still here, thank you for watching to the end. If you enjoyed the content, I'd really love it if you could subscribe. It really helps the channel grow. Also, I just want to take a second to let you know that I publish a monthly ore report. In the ore report, I cover a few interesting stocks on my own personal watch list, and I do a company deep dive. If this is something that you might be interested in, the link is in the description. I'll see you all in the next one.